Hey guys, welcome back to my channel. Today's video will be slightly different from the usual. I'll be sharing with you my investment and trading plan for the upcoming trading week. Hopefully you'll find today's sharing useful. This will be a two-part video. In this first video, I'll be doing a review on some of the stocks in my long-term investment watch list. So this watch list only contains fundamentally good companies that I intend to buy the shares outright and invest for the long term. If you're new to investing, be sure to check out my earlier video on how to identify good stocks for long-term investment. In the second video, which I'll be posting shortly, I will share with you my options trading plan for the upcoming week. So I use options to trade for the short term as well. If you're an options trader or interested to start trading options, stay tuned for part 2 of this video. Coming back to my watch list review, today I'll be sharing with you two stocks from my watch list that has reached my buy points. The first one will be Viva Systems, ticker symbol VEEV. Viva Systems is an American-based software company that provides cloud computing solutions specifically for the life sciences industry. So this company has a very niche expertise, and not many competitors are able to compete with them directly, even if they are an expert in cloud computing solutions. Viva definitely has a very strong competitive advantage over their peers in the cloud computing industry. Their net income and cash flows have also been increasing steadily over the years, so Viva definitely ticks the checkbox as a fundamentally sound company to invest for the long run. So the recent market correction in tech and software companies have seen some of these companies retracing back to attractive price levels again. Using discounted cash flow, the fair value of Viva is approximately $282. As of Friday's close, the price is at $254, so it's currently priced below its fair value. It has broken two of my buy points. The first buy point is at $271 and the second buy point is at $259. Remember, my buy points will always be lower than the fair intrinsic value of the stock because I will never buy shares that are overvalued. So the first buy point of $271 is actually the 200-day moving average on the daily candle chart. So it's the red line that you see on the chart over here. The second buy point of $259 is actually at the 50-day moving average on the weekly candle chart. So if you look at the weekly candle chart here, the 50-day moving average line would be the line in blue. So prices have been hovering around the 50-day average for the last couple of weeks. I personally don't think that it might retrace any further, but nobody can really predict the future, can we? So it is always prudent to invest in batches, and I definitely will be more than happy to buy more shares if the price goes any lower. The next company that I'm sharing this week will be Alibaba, ticker symbol BABA. Most people would know Alibaba for their e-commerce platform like Taobao, AliExpress, and Tmall. But in reality, the Alibaba empire is actually a lot bigger. Not only do they have businesses in the entertainment industry, they also have businesses in the retail arm and many other sectors as well. And perhaps the most lucrative part of their business will come from their financial payment business, Alipay. Alipay is an all-encompassing app that allows you to book hotels, purchase your train or airline tickets, purchase your car insurance, and almost everything under the sun you want to do can be done in this one app. The people in China use Alipay in almost every aspect of their daily living. The Alipay app is like an ecosystem, and it is very hard for them to leave the ecosystem because it has become a huge part of their daily lives. There are two major players in China. One is Tencent with the WeChat app, and the other is Alibaba with Alipay. Because there are no other big players and the users are deeply entrenched in their ecosystems, both Tencent and Alibaba have very strong competitive advantage. As a result of the recent news on the Chinese government crackdown on tech giants in China, the stock prices of many of these tech companies has come down quite a bit. Alibaba was hit the hardest because the founder Jack Ma made some comments that angered the Chinese government, and many of the initiatives that the Chinese government introduced recently were all targeted at Alibaba. So the question is, would I still invest in such stock? The answer is definitely yes. Long term wise, There are simply no other alternatives for the Chinese people because they are hooked onto Alipay's ecosystem. It has become a huge part of their lives. It is either WeChat or Alipay. There are simply no other alternatives. As much as the Chinese government would want to clamp down on these giant tech companies, there's only so much they can do. These companies have already grown so big and become such an important aspect of everyone's day-to-day living that it is almost irreplaceable. The latest quarterly earnings of Alibaba topped $33 billion. Profit increased 21% year-on-year, even as many other companies struggled during this pandemic. They have not and will not stop growing. All these are just short-term noises in the market. As a long-term investor, these short-term noises and correction in the market are actually good buying opportunities. Using discounted cash flow, the current fair value of Alibaba is approximately $432. As of Friday's close, the price is at $227, which is way below the fair value. It has broken two of my buy points. My first buy point is at $260 and the second buy point is at $228. So the first buy point of $260 is actually the 200-day moving average on the daily candle chart. So it's the red line that you see on the chart over here. The second buy point of $228 is actually a horizontal support line over here. It was previously a strong resistance level back in January of 2020, and now it has become a strong support level. Prices might go even lower from here if the Chinese government releases more news on the crackdown. As a long-term investor, you can never really predict the rock bottom, so it is always good to buy shares in batches. I am always happy when prices fall further because I can buy more shares at much cheaper prices than their fair value. If you're worried about US delisting China companies from the New York Stock Exchange and want to sleep soundly at night, you can always buy the equivalent of Alibaba on the Hong Kong Stock Exchange. The ticker symbol of Alibaba on the Hong Kong Stock Exchange is 9988. So for me, I want to sleep soundly at night, so I bought all my Alibaba shares from the Hong Kong Stock Exchange. So that's it for part 1 of the watchlist review on my long-term investment portfolio for this week. I hope you have found this part useful for your own investment journey. If you have any questions or suggestions, feel free to leave them in the comments section below and I'll try my best to answer them. If you are interested in short-term trading using options, I will see you in part 2 in the next video. Thanks for watching.